Even though everyone expected inflation after the Federal Reserve lowered interest rates last year, the central bank has assured us that we have nothing to worry about because inflation is currently running at a rate slightly above 2.4%. The prices have, however, increased significantly since then if we observe what is taking place. Not just asset prices like houses, stocks, and so on, but also consumer prices. Because the economy is recovering from the pandemic and people are getting back to work, which means that people are spending more money than they ever have before. The rate of inflation in the United States has jumped to its highest level since 2008, making it the highest level it has been since 2008. The Consumer Price Index increased at a 5% annual rate in May, up from 4.2% in April, and the fastest rate since August of 2008. As the saying goes, for every problem, there's an opportunity. And while most people are losing out due to inflation, a select few are profiting from it. Is there a way to make money off of this inflation, or is it a lost cause? The answer is straightforward: yes. Let's take a look at the various ways in which wealthy people are raking in millions of dollars thanks to the current rate of inflation. Number 1. Possession of physical assets. The majority of people are under the impression that currency is not a commodity, like any of the other items on the market. The market determines the price based on a number of elements, including supply and demand. Say, to illustrate, that on one side of the ledger you have the entire economy's worth of money, and the other side you have 10 houses. A single house will cost $1 in this hypothetical example. However, if we inject an additional $10 into the market, there will be $20, and yet the price of a single home will increase to $2 even if we build 10 of them. That is a straightforward explanation of inflation. When the economy was on the verge of collapse last year, the Fed decided to inject trillions of dollars into the economy to avert a depression by distributing stimulus checks and purchasing corporate bonds. In 2020, 22% of the US dollars currently on the market were printed. Inflation was obvious to anyone with a basic understanding of economics. That is why, back then, anyone who could afford a house immediately invested in real estate, rather than holding cash, especially since interest rates were at an all-time low. It makes no difference what the real rate of inflation is, whether it's 2.4 or 3.4%, because house prices increased by 15%, and by some estimates, by 18 to 20%. This means that real estate investors not only outperformed inflation, but also profited greatly. The wisest investor, on the other hand, did not simply buy houses, but also took out mortgages, because leverage is important. It turns good deals into great deals, especially since interest rates were at an all-time low. Number 2. Debt. While many of you may hold a negative view of debt, it can actually be beneficial, especially in times of inflation. If $1 today is worth more than $1 tomorrow, I will have made a profit if I borrow $1 today and return it tomorrow. Today's median house price is around $350,000, but it was lower 20 years ago, equivalent to roughly half of that, or $150,000. Because the real value of the dollar falls every year. The same $150,000 was worth $350,000 20 years ago. That's why, when the Fed lowered interest rates and started buying corporate bonds. Therefore, when the Federal Reserve began purchasing corporate bonds at historically low interest rates, the question naturally arose: who borrowed all that money? Global behemoths like Amazon, Facebook, Microsoft, Apple, and the like would gladly take the cash, but they have no use for it. Apple has a cash pile worth more than $200 billion. But it was still borrowed money because why you use your own money when you can simply throw it away? Invest in the S&P 500 and earn at least 10% while borrowing at 1%. Your business would still be profitable even if you only made a 5% return on the borrowed funds by investing them. Furthermore, when you borrow money, you receive all these tax advantages. As a result, you will save money on taxes. Any money you borrow at an interest rate that is less than inflation is, in theory, money earned. Number 3. Gold. Gold's distinctive quality as a store of value, especially during times of crisis, has made it an important commodity throughout history. Gold prices rise when the future appears uncertain. Gold prices rose from around $600 to $1,000 in 2007 as a result of the 2008 financial crisis. In a state of panic, investors rushed to buy gold. Eventually, the US dollar could become completely worthless, but gold will still be valuable. While the US dollar has lost more than 90% of its value in the last century, gold has retained its value since the dawn of civilization. Investors once again panicked and bought gold aggressively in 2010, driving prices to an all-time high of $1,900. However, the economy has since stabilized and the gold bubble has burst. When the economy appears to be improving, investors typically do not purchase gold and silver. They make investments in assets, such as stocks. As a result, gold prices frequently fall during predictable, stable times. However, when the United States launched a trade war with China in 2019, gold prices began to rise again, and the pandemic worsened the situation. For the first time, gold prices surpassed $2,000 per ounce. Gold has always been a great way to profit from inflation. A single US dollar was a lot of money in 1973, but today it barely gets you candy. Gold prices have risen from approximately $100 in 1973 to approximately $1,800 today. It is an active asset that offers a service or product. Number 4. Crypto. As previously stated, one of the reasons Bitcoin has risen so dramatically in the last year is that the Fed has begun printing trillions of dollars. Investors who had previously bought stocks and houses decided Bitcoin is like digital gold, so let's buy some of that too. Many people who were uninterested in Bitcoin prior to the pandemic don't recall the price of Bitcoin being around $8,000 at that time. Prior to the trade war, the price of Bitcoin was only $3,600. If you were interested in Bitcoin when most people weren't, you could have made a lot of money. However, when something is all over the news, people usually get excited about it. The most astute investor enter the market before the masses and have increased their wealth by 10 to 20 times since then. Number 5. Shares. The S&P 500 increased by 40% between July 2020 and July 2021. That's an incredible return, especially considering if you're investing in the entire US economy. Buying stocks represents an investment in a portion of a business. They are also referred to as shares for the reason. When there is an excess of cash in the economy, the value of that business increases, so you are growing alongside inflation. Furthermore, that money is typically spent on basic needs and desire, causing businesses to grow faster, allowing you to not only beat inflation but also profit from it. And now that people are returning to work, the economy is reopening, and people are spending more. These businesses are poised to expand even faster. The key is to keep your money invested in assets that are inflation protected. The majority of wealthy people do not keep much cash on hand. They usually keep a small portion of their net worth liquid for emergencies. They are so wealthy because they own a certain percentage of the companies they founded. Their wealth grows in tandem with their businesses. Even if you only have a few $1,000s, one of the tips we discussed can help you profit from inflation. If you found this video useful, please leave a like and don't forget to subscribe. We are excited to share more videos that will be beneficial to all of us. Thank you for watching, and we'll see you next time.